Do you actually need to hire a financial advisor? As a financial advisor, it may seem strange to actually film a video on this subject and talk about the reasons why you might not actually need a financial advisor. But as I've found over the years, people are pretty embarrassed to approach an advisor and ask them, should I hire you? Do I even need you? What kind of value am I going to get out of this relationship? So I wanted to go over 5 different topics as to the reasons why it may not actually be in your best interest to hire and pay for a financial advisor. Reason number 1, you actually enjoy doing this stuff on your own. You enjoy doing your own market research, your own investment of your own portfolio, looking up things online for your own personal finance things. And so maybe you really don't need to pay somebody else to do that for you. I mean, after all, that's the whole purpose of an advisor, is to do these 2 core areas of competency for you. So you're paying them for their time. And so, but if you enjoy doing it yourself and you have the time to actually do it yourself, then might as well just save yourself the money and continue to do it yourself. But I think it's important to note that you have to truly understand how the markets work, how the investment market works, how the economy works. Are you actually allocating enough risk in your portfolio? Are you allocating too much risk? Do you understand the tax implications of these decisions that you're making in your life? And if you do, great. But if not, then you should seriously consider the other side of the coin is, should I actually go out and pay for an advisor? Reason number 2. You have the time to do this on your own. So it's sort of like reason number 1, you enjoy doing it. But number 2, you actually have that time. Because I've come across a lot of people who enjoy the capital markets, enjoy investing their own money, but they simply just don't have the time. So they have to hire somebody to do this for them. But if you do find yourself in a situation where you do have enough time and the proper amount of time to do this, then by all means, feel free to go ahead and do that. Occasionally I'll see people who will take a career change, and so the time that is demanded from them is a lot less than it used to be, so they're happy to take this on for themselves. Or likewise, people who have retired, right? If you're retired and you have more free time on your plate, then they enjoy waking up every morning, reading the Wall Street Journal, going online, watching financial TV news. Be careful of that. There's a lot of bad advice out there. But, all things considered, they are putting forth that effort. They are doing their own research. They can actually put in the proper amount of time to make sure that A, their portfolio is correctly allocated, and also B, that their personal finance decisions are well founded as well. Reason number 3, they're just not quite ready yet. So if you find yourself in a situation where you're just like, I don't feel ready. I don't feel like that I have some big event in my life that is driving me to go seek out a financial advisor, then yeah, you don't really need a financial advisor. If there's one thing that I've learned in this business over the 10 plus years that I've been doing it, is that nobody is going to engage with an advisor unless there's a major catalyst in that person's life. Bottom line. This is why whenever you hear about your cousin or your friend or your college friend who's trying to make it as a financial advisor by picking up the phone and cold calling, and it's really not working, it's because they're calling a bunch of people who probably don't have that major catalyst in their life. And these catalysts are things that are going to be like, I'm approaching retirement, and so I need help determining whether or not I can retire on time. Or my company is going through an exit or a capital raise. I need to make sure that I'm making the right decision. Or there's a death in the family. Or I just had a child. Something. There's that outside force impacting that person to drive them to seek out professional advice because they realize that the stakes just really are high, and making that wrong decision is going to be quite costly. So if you are not ready and you're not facing a catalyst, then maybe you don't need an advisor. But if you do, if you're watching this video, then chances are you're probably facing some type of a catalyst in your own life. So it might be a reason why you might want to consider seeking out a financial advisor. Reason number 4, you have a bit of trust issues. So engaging with a financial advisor, it does require you as the client to open up. Open up about your own personal goals and to open up about your own portfolio performance. And I've seen this being a sticking point with a lot of people. It's very hard to open up and say, here are my innermost, deepest desires about what I'm trying to achieve in life. Not everybody wears their heart on their sleeve, so it does take a bit to kind of open up and talk about all these things. Furthermore, if you have a significant other, it may be a little bit daunting to admit that my own personal goals may not completely align with my significant other's personal goals. And so that might be the sticking point of why you may not want to engage in a financial advisor, right? It may be best to talk with your significant other about these big overarching goals first before doing so. That being said, there are some advisors who they do kind of behave a little bit like therapists.
It's not your fault.
We find ourselves doing this in some situations where we do kind of help talk through these different issues with our clients and kind of come on to some type of a common ground, or maybe even a plan that satisfies both significant others. So it does require some opening up. It does require trust, because trust is earned, right? It's not given. And then to my second point is you do have to open up about your own portfolio. Now, for most people, this is not an issue. Most people who come through the door, they say, well, I've just invested in some index funds, or I bought, these handful tech stocks, or I've just been keeping it in cash because I don't really know what to do about it. But some people have had a difficult time opening up about that because they're a little bit embarrassed about their performance and what their portfolio looks like. And so people may have had the wrong idea in terms of what it means to be a portfolio manager. So they attempted it themselves and started trading a lot. They started buying stocks and selling, or buying options, or some type of like future strategy that they read online. And it usually results in pretty poor performance. And so it's hard to open up about that and to admit that, I've done not the best job in the world. And so I do need professional advice. So sometimes these are sticking points, and you have to come to terms with the reality of the situation, of your situation, before you can actually step forward and receive that professional advice. Number 5, you're a saver and not an investor. Now, this does come up not as often as you would think, because typically whenever someone approaches a financial advisor, they're an investor, they're ready to invest, and they have an idea in terms of what that means. But I think that most people fall into one or two categories. Category 1, you're a saver. Category 2, you're an investor. Now, to be an investor, you have to be willing to accept volatility in your portfolio to achieve long-term returns. That's just the nature of investing. That's just the nature of life in general. And so if you understand that, then you're okay with that. You said, okay, I'm going to risk my capital. I know that it's going to be very bumpy over time, but if I have the right investment allocation over time, my portfolio is just going to go up over time. Now, savers, on the other hand, they may not be willing to make that trade-off, or they can't make that trade-off. Savers cannot stomach the volatility. They can't sleep well at night whenever the markets are down, and they feel very nervous whenever they see anything fearful flash on the news, right? We have a war going on, or we have interest rates going up, or we have an election cycle coming up, something that makes this person very uneasy to risk their capital. And that's okay, right? That's okay. It's not saying that it's a bad thing to be a saver, but at least know that you're a saver and not trying to pretend to be an investor. I've seen that happen in the past, and it usually does not end very well. So coming to this conclusion sooner rather than later is probably going to be much better in the long run. That being said, if you happen to be a saver, but you don't want to be a saver, you want to be an investor, you can change. You're not stuck in this one category and you can't move across into the other category, right? All it takes is education, right? Education is going to relieve a lot of those lingering doubts in your mind. You're going to understand how the markets work. How does the economy affect the stock market, the bond market, so on and so forth. And the more you understand, the more at ease you're going to be with your own portfolio allocation. Not to say that you have to be one or another, but I do know some very well educated individuals who understand the markets, understand the economy, but they're still a saver, right? They just cannot sleep comfortably at night knowing that their capital is always at risk. So if that is you, then chances are you're not going to need a financial advisor who's going to be managing your money. Maybe you only need a financial advisor in an hourly capacity or some type of retainer status who's only going to provide that planning for you. So something to consider. There's different flavors of advisors, right? But do your research and make sure that it is the right fit for you. Okay, so for some final thoughts, there are plenty of reasons why you should not hire a financial advisor, but there are also plenty of reasons why you should hire a financial advisor. So if you are looking to actually delegate the financial responsibilities of your life, right, your investment portfolio, your financial planning responsibilities, and if the stakes are really high in your life, right, you have that really big catalyst in your life, you need to make that right decision, then it can reduce a lot of the stress and it can help you make that right decision. And in the end, hiring a financial advisor can help you achieve longer term portfolio returns, which in the end is going to result in a higher net worth for you. So go out there, interview a few financial advisors if this is you, right? You want to look for an advisor. Find the right financial advisor that meets all of your different needs and one that you feel comfortable with. I hope you enjoyed this video. Again, my name is Ryan Hughes, founder of Bull Oak, an independent advisory firm focusing on high-income individuals. To learn more about how we help our clients achieve financial success, please visit bulloak.com.